What's the bigger picture here?
I think it's a great jobs report. We're seeing unemployment going down and we're seeing jobs being sticky, which is nice. And I think a lot of companies are being a little cautious right now as to where, in the short term, where things are going to be going with the administration and tariffs and a lot of this. So I think people are just holding on to cash right now. So I think everything is really good, and we're starting to see the GDP really kicking up, and that's nice. So I think moving forward, that's going to be really good for the job market.
So if companies are not laying off people, but also aren't hiring aggressively either, what does that tell you about a business confidence right now?
I think there's not a whole lot of confidence right now. We've seen that recently with a lot of the reports that have been coming out with consumer sentiment, and everybody's a little bit gun shy right now of what to do and hoarding onto that cash. So I think as we start seeing a lot of companies reshoring and jobs coming back into the country and us being able to sell in other countries that we haven't been able to sell to, I think that's going to be really good. Manufacturing is going to be going up, and because there's huge incentives for outside companies from the U.S. to come back in and start producing here and not get hit by those tariffs. So I think long term, I think we're going to start seeing things start heating back up here, I would think, and by mid-year.
Okay, so things are looking good this year, just not too far down the road. Does the steady labor market and the recent inflation reports, which look pretty steady as well, give the Fed any reason to cut rates? Or maybe keep them the same for longer? What do you think?
I think they're going to continue with what they've been saying. Powell's been pretty consistent saying what they were going to be doing rate-wise. And so we had our rate cuts at the end of last year. We can expect one more rate cut this year. So I think we're going to see that. Beyond that, we'll see what happens. But things are going great right now. And it's nice to see the rates coming down for interest rates or home buyers. So I think it's going to be good. It's not going to be good for savers and for seniors. We're starting to see those money market rates and treasury rates coming down, but hopefully that will start heating the home market back up here in the near future as well.
Speaking of mortgages, President Trump ordered Fannie Mae and Freddie Mac to buy $200 billion of mortgage loans, right? What did that do to interest rates?
Yeah, so that started bringing interest rates back down, and we're starting to see interest rates falling below 6%, which is going to be great. And something that we're seeing as well that we've talked about before is all the consumer debt that's going on. So a lot of times, it's easier for people to refi and get money out of their existing home to start paying off some of that high interest credit card debt, which had been steadily ticking up over $18 trillion now. So I think that's going to be good to bring pressure down and lower those rates. And he's been harping on it for a long time to get those interest rates down for Powell. He's under fire, so we'll see what happens.
I'm sorry. He ordered Fannie Mae and Freddie Mac to buy $200 billion in mortgage bonds, and already that's gone down about a percentage point. The mortgage rates have. Do you see that going down any farther, just based off of this one move?
I think we'll start seeing them trickle down a little bit more here in the near future, but until the Fed drops the rates again, I wouldn't say them moving much more.
Okay. All right. Patrick Mueller, president and advisor. President of Bella Advisors. Thank you. Appreciate your time and insight today.
Thank you, Alicia. Great to see you.
You got it.